If you've just moved to the United States, you might have a job, money in the bank, and even pay your bills on time, but still have no U.S. credit history. That can make it harder to qualify for an apartment, a credit card, or a loan. The good news is that you can build credit safely without going into debt. In the next few minutes, I'll explain how U.S. credit works, what actually affects your credit, and a simple step-by-step plan to start building it responsibly. First, let's clear up one common misunderstanding. A credit report and a credit score are not the same thing. A credit report is a record of your credit accounts and payment history collected by credit reporting companies. A credit score is a number calculated from that information to estimate how likely you are to repay borrowed money. As the Consumer Financial Protection Bureau, or CFPB, explains, you may not have a credit score at first if there isn't enough information in your credit report. It's also important to know that there isn't one universal credit score. Different scoring models and lenders may use different information, so the score you see in one app may not be the same score a lender sees. Many newcomers ask whether their credit history from another country transfers to the United States. In most cases, it does not automatically transfer. That means many immigrants start with little or no U.S. credit history, even if they manage their finances responsibly elsewhere. So how do you begin? Step 1 is to check whether you already have a U.S. credit file. You can request free credit reports from the 3 major nationwide credit bureaus through annualcreditreport.com, the federally authorized source. Having no report or no score is very different from having bad credit. Step 2 is to choose one beginner-friendly credit product. Depending on your situation, that could be a regular beginner credit card, a secured credit card, or a credit builder loan. Before applying, confirm that the lender reports your account to the major nationwide credit bureaus. If they don't report your payments, the account may not help build your credit history. If you're considering a secured credit card, compare the total cost, including any annual fees, security deposit requirements, and other charges. Different issuers have different policies. Step 3 is simple but extremely important. Use the account for purchases you were already planning to make. Don't spend extra money just to build credit. Step 4 is the habit that matters most. Pay every bill on time. According to the CFPB, payment history is generally the most important factor in building a strong credit profile. Whenever possible, pay your full credit card statement balance by the due date. You do not need to carry a balance or pay interest to build credit. In fact, paying in full can help you avoid unnecessary interest charges while still building a positive payment history. Another factor many scoring models consider is how much of your available credit you're using. Rather than chasing a specific percentage, try to keep your reported balance comfortably below your credit limit, especially if you're starting with a low limit. It's also wise to avoid submitting many credit applications in a short period. Formal applications can create hard inquiries, which may affect your credit. If available, you can consider pre-qualification tools that clearly state they use a soft inquiry, but remember that pre-qualification is not a guarantee of approval. Some people may also build credit by becoming an authorized user on a trusted family member's credit card or by using rent reporting services. However, these methods only help if the card issuer or rent reporting provider actually reports the information, so always verify that before relying on them. One more important note about identification. Some lenders accept an SSN, while others may accept an ITIN or different documentation. Requirements vary by institution, so always check directly with the lender. An ITIN is issued for federal tax purposes and does not provide work authorization, immigration status, or guarantee credit eligibility. Finally, monitor your credit reports regularly. Checking your own reports does not lower your credit score. If you find inaccurate information, federal law gives you the right to dispute errors with both the credit reporting company and the company that supplied the information. Here's your practical checklist. Check whether you already have a U.S. credit report. Open one affordable credit building product that reports to the nationwide credit bureaus. Use it only for planned purchases. Pay every bill on time and pay your statement balance in full whenever possible. Avoid applying for multiple credit products at once. Review your credit reports regularly and dispute any errors you find. This video is for general educational purposes only and is not financial, legal, tax, or immigration advice. Rules, products, fees, and consumer protections can vary by lender and by state. For the most up-to-date guidance, review official resources such as the Consumer Financial Protection Bureau, the Federal Trade Commission, and the IRS where applicable. Thanks for watching New Roots Money. If you found this guide helpful, consider subscribing for more practical, research-based tips to help you build your financial life in America.